Hello. Mic test. Hello and welcome, guys, to this 33rd edition of the Trading Opportunities webinar. This is your host, Nirav, and I'll just wait a few seconds, not few seconds, a few moments, so that we can set up everything and the audience should also join in before we begin the actual discussions. So if you are able to hear me and see the shared screen, then do let me know, guys, in the comment section. Okay, and I'll just quickly check on YouTube. There it is, 33rd. Let me see. Hello. Mic test. Got it. Thank you, Charles, for the comment. Hello, Steve. Hello, Clever. Sorry about the delay. It was a really hectic day, and I am actually I'm actually thinking of just taking a break tomorrow, which is very rare. I generally don't take breaks on actual trading sessions, or I'll just continue with the reduced capital. So anyways, we'll discuss how things went and what was the trade keeping me busy. How are you guys doing, Steve, Clever, Charles? Before I actually continue with the webinar, I'm just letting a small amount of time pass so that those who are going to join in live can join in. Okay, so all good, doing well. How about you? I'm doing well as well. And we'll also have a quick look at some of the trades I pulled and some of the trades we are currently in as well. Steve is saying trading is okay, but I got greedy. Yes, that's the same story with every trader, isn't it? That's actually one of the things we need to work on instead of just trying to get better at trading and analysis. I'm actually planning on writing a book on the subject matter of controlling our minds during trading. Actually, I have a lot of content already ready because I've been researching about while I was trading, I was observing myself and writing notes and all that for many years. But anyways, it's just a thought at this point in time. So guys, I think it's what do you call the time we start officially. So I'll start as always with the disclaimer here on screen suggesting that all content presented here is purely for educational purposes. I will not be soliciting any buy or sells, or I am not soliciting any buy or sell to you guys. But if you do go on to use the views presented here for your trading or investing, then you yourselves are liable for your profit, loss of profit, and whatnot. You can read everything in the image here, right? So with the legalities out of the way, let's head over with the quick discussion about who I am and what are we doing here. For those of you who are joining in live, my name is Nirav and I'm the admin and owner of 50as.com, which is a website where I have been producing my views on various different markets, including stocks, Forex, commodities, global indices, cryptos for many years, specifically 7+ years. And this webinar is called the Trading Opportunities webinar, and this current session is a 33rd session in the series of these trading opportunities Webinar, I have conducted 32 before this. That basically means just that. And we conduct webinars on Monday, Wednesday, and Friday at 2 p.m. GMT. Right, 2 p.m. GMT. You can join us live and check out the trading opportunities as we discuss them in live markets. And this webinar is broadcasted live on YouTube, which is most likely where you are viewing it at, or it will also be shared later on once it's complete to multiple different vendors which I work with, or partners, or whatever you would like to call them. You can check this webinar or the past ones by visiting the live section on my channel, 50 Eyes Market Analysis. Just hit live and you can check this current webinar 33rd or the past ones like 32, 31, 30, etc., etc., etc. Right. So apart from all this quick introduction which I have given, two more important things. I am also the author of the book called Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Waves, which is available on Amazon's Kindle platform for instant access. You can see the title here, right? And lastly and most importantly, I have a exceptionally industry leading track record, whatever you would like to call. Just don't like talking about boastfully about myself, but what can I do? This is the about us part. I have to tell it. So this is the industry leading track record of 6 years plus accuracy, consistently 80% plus. Why am I saying industry leading? Is because even a 60% plus accuracy is considered exceptionally high in this profession, and here it is with 80% plus for 6 years and reaching as high as 90%. You can check these spreadsheets by checking the instrument name, the date when the analysis was done, the analysis itself, and the actual video which contains the analysis, and the outcome is here. Things that worked out, we give them +1. Things that did not work out, we give them -1, and so on and so forth. You can just check this spreadsheet. 2021, we had an accuracy of 82.22%, and so on and so forth. You can go down 2022, 88.52%. Again, you can just check out the spreadsheet by scrolling down. 2019, 84.88. Same thing goes. 2018, 84.61, and 2017, 87.5, and so on and so forth. Right. With my expertise already proven in front of you guys, I think the About Us section has done enough. Now, finally, we'll just have a look at how we will continue with the actual webinar. So the actual webinar will proceed something like this, that first of all, I'll discuss a particular instrument, and then I'll ask you guys if you have any doubts. At that point in time, you can just type it in the comment section if you have any doubts, or you can just type in clear or understood. Our discussion starts with Euro USD, followed by EURCAD, USDJPY, EURJPY, crude oil, gold, S&P's 500, which is the interesting one today, and the Nifty, which is even more interesting, followed by Bitcoin, which is doing things as expected. Right. Now, let's head over and start the analysis. Also, guys, if you can give me one final confirmation before we actually head over to our Euro USD chart and start things off, just by typing in that screen is clear. Just anybody, any one of you guys who are online, that will work. Okay, so let's head over with our first discussion of Euro USD. Last time when we discussed, we were of the view that this market was, thank you Steve for the confirmation, that this market was possibly having the wave 5 complete here. That was one of the primary analysis we had. Right, and the furthermore, the trade setup was that if this market has actually completed the wave 5, then the short setup will or should come into play, and it will only come into play once this market breaks below this orange trend line, right? So basically, long story short is that we were waiting for this market to break below this orange trend line for possible shorts, or let's say to think about taking shorts, and triggers were around this level of alert, which is around 1.07499, right? So now the situation has changed a little bit. What is really happening is that this market seems to be continuing for the wave 5 in the upward direction, right? The setup for short side is still there, but as we can see, this does not look like this market is going to break the channel. So what I do think about this count wise, this is the updated count, we think that this market might be forming an impulse in the upward direction. Let me just quickly do this. Yep, done. So this market might be forming an impulse in the upward direction. What are the targets? So generally, we don't really have to do anything much about the targets because the targets are provided by the upside trend line. However, in this case, it is a little bit too much up, and I think we will need to analyze some short-term targets, which we will do as now. Right. Now, before I proceed further with the targets and everything for Euro USD, I'll just quickly clarify a few points. Firstly, we were able to capture this whole move to the upside. This was our target 1, this was our target 2, right? We were able to capture it in live market. You can just check the webinar conducted near the date of 6th January or something. I predicted the whole possible reversal and entry, how to take the positions, how much you should go in, etc., etc., right? Just to mention, it is the level of 1.05005. Okay. Now I'm pointing it out so that you guys know the importance of following every single webinar when it's conducted live. That way you will be in the best position. That way you will have the first opportunity to jump on a possible trade. Right. Somebody asking me on TradingView to start talking slower. So guys, can you just confirm if I'm talking a little bit too fast here? I'm actually talking slower than my regular pace, but I can understand if you guys want me to change it a little bit. Let me know in the comment section and I'll do things accordingly. And I'm asking on YouTube because a lot of people have joined in live over there, and the discussions or the comment sections on TradingView generally does not look very lively. So I'll have to follow what the YouTube audience says. So Philip is saying not at all. Okay, in that case, let's proceed with the normal pathetically slow pace. Generally, I can go 10 times, not times, maybe 3 times faster. Okay, Steve is saying speech is good. So continuing further with our Euro discussion, as I was saying previously, short setup, let's just do it like this. Short setup is no opportunity for selling unless the market goes below the orange trend line. Orange trend line, market moves below it, is not a sell. It is a sell if you are aggressive trader, but it is basically just a signal that maybe now the shorts are coming. And I will personally be interested in taking shorts below 1.07499. Okay, so short setup we have discussed. Now discussing the long setups, which I think is the thing the market is doing. So it looks like this market is heading over in the impulsive direction. That is, it's going to go up for at least 2 legs. By 2 legs, I mean first it will go up for this wave 3. Then after a small correction, it will go up for the wave 5. Okay. So basically up for 3 is the first leg up for 5 is the second leg up. So if something has 2 legs up, then definitely it's something we should look for trading. Now, as I mentioned, for long setup, the targets are provided by the upside trend line, but I think in my personal opinion, it is a bit too high. So let's quickly try and see what other targets are available for us. So it's already there, 4.88% move or 0.5199 pips is what is our next target. It is extremely near to our actual current market level. So again, I don't think this is a worthy target to bother ourselves with. There are multiple different ways we can use Fibonacci retracements to figure out targets. One of these would be this, which I've just done, right? So basically, we are looking for targets around, what is this? Okay. So first of all, we are looking for the next targets around 1.12362. And one, if it continues higher, which will be very high, will be 1.17012. This is actually very high, but it's there on screen. So these are the targets, 1.12362, and intermediate profit booking we can start at 1.10926. Now, as you guys already know, my way of market analysis and actual trading is that I don't really care much for the targets. Just because I'm coming in live in public view, I have to discuss these things. And the reason is not focusing on the targets is that these things change very fast, and generally if the market is moving in your direction, you can also just trail the whole thing. You don't really need the targets. Targets are just basically to show off, or if you are running analysis business, maybe then they might be useful. So anyways, that's our discussion on Euro. I think I've covered all the grounds, the upside setup, the downside setup. Let me know if you have anything specific you would like to ask. I'll just wait a few seconds in the comment section. Or by the way, if you guys are clear, just type in understood in the comment section. That way we will know that everybody is on the same page. Next chart of discussion will be EURCAD, which is already on screen, and it's really not doing anything new. It's actually following our plan. Hello, Hari. Hello, Philip, Steve, and Clever. The delay in audio looks to be extremely huge this time. What did I click? Okay. Thank you, Clever. Okay, in that case, let's start our discussion on EURCAD. So EURCAD, as we discussed so many times in the past, it is really actually following our analysis as it is. So let's see what our analysis was for those of you who are joining in live for the first time, or maybe they are watching it as a recording later on for the first time. So from this point of reference, which is the price level around 1.45932, we have the analysis suggesting that this market might start going down. So in live market conditions, we were able to predict the fall after the channel break, and this was our target one. So we were able to capture this move, and then we were able to capture the fall from this point, and then capture this move because this was our target too. So these two movements we have been able to capture in live market conditions. From then on, our analysis has become that it is possible that this market completed the whole correction here, and that this market should head higher, right? And the secondary analysis was that this market is still continuing the correction, and within this box range, it will just keep going down, up, down for God knows how much time, and then it will go higher, right? So based on this analysis, we concluded previously that this is a swing perspective long. If you don't mind holding it, you will have to hold within the range of 1.46379 to 1.42309, which is wide enough for it to be comfortable to many people. Again, depends on your position sizing as well, right? If you are of the view that you should hold, then the entry levels which we discussed were that if you generally enter with 10 lots, you should enter with 1 or 2 lots over here, and the remaining 3-4 lots over here, and the remaining 5 lots when it crosses the high. So that was our pattern. So this is the plan. It really hasn't done anything new. So you could apply it now. You could have applied in the last webinar when we discussed, or any point in time. But you know my stance on this thing is just I'm not interested. As we just saw, Euro USD is presenting a much better opportunity, in my personal opinion. And let's head over to the next chart. Just do type in understood or clear or something in the comment section. Next, we will be discussing the chart of USDJPY. And USDJPY, it actually is moving as we expected it to, but we'll discuss it in wider detail or much more detail now. So USDJPY, right? So this is our point of reference on USDJPY around the point of 138.184. We are expecting that this is the first leg down called the wave A. This is the correction for wave B and should be followed by a wave C, was or is our expectation. Now, given the fact that it is following down as an A, B, and C, I'll just like to quickly point out for you guys who are not familiar with the type of analysis which is Elliott Wave, which I use as advanced form of Elliott Wave, my own proprietary studies on top of existing Elliott Wave analysis. And what I'm talking about here is a zigzag pattern. Zigzag pattern is, as you can see, first leg down followed by a small correction, then followed by another leg down. So this is your first leg down. This is the small correction. This is the another leg down. Thank you, Jill and Clever, for the confirmation there on YouTube, by the way. Now, what we see here is a possible triangle in formation, right? Triangle is a sideways corrective formation which can complete the wave B, which is what we think is forming here or formed here, right? Now, if this was actually a triangle, then once the triangle is complete, we should be able to see a new leg down, which should take, in theory and in practice, this market lower than the recent low of 127.261, right? So this is all based on the understanding that if the B is complete, if the B is complete, then this market can go lower. Okay. But in this particular case, we do not have the confirmation, although looking at the price movements, we do get the feeling that this is the wave B complete. But however, I'd like to just very quickly mention that this is a wave B and they are by their very nature sometimes complex. So it will not be out of the ordinary that we see something like this before the fall. And wave B in that case would be some sort of complex formation or flat. I don't know. I mean, when it will complete the whole thing, then only we will know. My whole point is that either it can go straight down from here or it can go first up and then down from here. So basically, downside there is zero confirmation yet, because if you guys recall, because of the spikes we have seen, we are also not relegating the bullish possibilities. That is, what is there to say that the B is already complete and the C is complete here, right? Of course, it does not form the most clear looking count, and I personally think that this looks more corrective than impulsive. But in my own personal experience and analyzing thousands of charts over literally every time frames, including 1 second as well, this thing does happen. And specifically in Forex, these things happen a lot where a structure is looking like an impulse, but it really is a correction, or it's looking like a correction, but it came out at the end as an impulse. So just be cautious of that. Long story short is that I will be interested in selling this market below 128.366, right? And it can fall straight down or it can go straight a little bit up and then down. So that's why my cautionary behavior here. That I think covers both setups that I had in mind. I don't think there is any doubt, but I'll just check out your comments in the comment section. Of course, where will I check the comments if not in the comment section? Not a very clever joke, right? Clever. Anyways, guys, now I'll just move over to EURJPY. You guys do let me know in the comment section if you were clear or if you had any doubts. So here we are with the chart of EURJPY, right? And thank you for the confirmation, Steve. Right, so on this chart, hello Philip, good morning to you. Thank you, Clever and Jill, for the confirmation. Okay, Clever caught my joke. Okay, so now jokes aside, let's get serious with EURJPY a little bit, and let's see what we are actually thinking here, right? Just to quickly summarize what we have discussed so far in many of the past webinars, this is our expected formation. This is basically a diagonal in the downward direction. If you don't know what a diagonal is, just a wedge pattern in price action terminologies, right? And after this wedge, what we really expected was that once this wedge is complete like this, then there will be some correction and then there will be another leg like down, right? So this is your wedge. Then there's this another leg which goes up, and then this new leg will go lower than the last low. So new leg should go lower than the last low. That basically means this level of 137.274 should be taken out to the downside, right? So if 137.274 or whatever that is, just check your data feed. I'm using this one. You may have different data feed. It will lead to different price levels. So once once it goes lower than this level, then we can consider that this count is worked out, right? So far it has not gone lower than this level. So the question becomes, has it completed this correction upside? So this correction is called a wave B, by the way. So this down leg is called an A, this correction to the upside called a B, and the next leg down will be called a C. It's quite self-explanatory, right? So this, as you can see, is over A. And now the question becomes, is the B complete here, or is the B still continuing to the upside? Now, we did talk a little bit about it in the last webinar, and I said it that there is this red trend line. If the market is going to go higher before the reversal, then we should establish, or the price should establish itself above the red trend line, right? Quite straightforward, right? Now, so far the market has confirmed, the market has told me that Nirav, yes, you were sort of right, and I'm going to take some resistance over the red trend line. If the market were to talk to me, it would probably use something like that. Something like that kind of wordings, right? Anyways, so long story short is, since the market has not formed a base above the red trend line, it can straight out fall down, right? Now, because it has not established of the red trend line, that does not mean it will not. In the future, maybe, or in the next session, or maybe in the next 2 hours, it will go up and then form a small correction and then go up again and then form the reversal. So how do we trade a situation like this, where uncertainty about the reversal is already there? Now, the plan here is the same as we discussed last time, but just to re-emphasize, if the market establishes above the red trend line, then we expect it to reverse either, basically not either, within the price range of this white box. So what is this white box? This is the price range of 144.207 to roughly 142.912. So between this price range which I just mentioned, we expect that if the market goes up, it will reverse, right? Now, this actually will be a little bit in our favor, because if we have a already existing high probability reversal zone, then it generally is a better plan than just straight out taking shorts without any confirmation, right? So long story short is, reversal from this region would prove to be a better opportunity, and I might go with a bigger position. Right now it can straight out fall down, but I'm not taking any shorts for now. I'm not interested in holding. Let's say I take some partial shorts here, then if the market does go higher, then I'll have to hold it for this much distance, which is not something I'm currently very happy about. Okay, so if the market falls, then I will be seriously looking for selling around or below 139.20 something, right? So this alert is just to send me an indication that now I should be interested in selling. This is not a direct sell short or a trade setup per se. So that basically covers our EURJPY analysis. I have again discussed the long scenario and the short scenario, and those of you who are not much familiar with the way I do analysis is that I try to discuss as many possibilities that the market can take as possible, because after all, at the end of the day, the purpose of any analysis is to figure out or plot possible ways or paths that a particular market can take, and not try to be very, what do you call, pompous or egotistical, and just saying that because I have a trend line or arrow drawn here or there, then the market should do that. The market doesn't really care, or it doesn't really care you exist even, right? So you get the point. So that's the way we do things, and I hope you also understand why we do it the way we do it. Now let's see the comment section. Jill, it's only Philip, I think. Yep, Philip has confirmed that he was able to copy along with the analysis. What about the other guys? Jill, Clever, Steve. A lot of you guys are online. I would like to see a little bit more participation here. And before I move to crude oil, I'll check your comments, or I would like to check more comments. And crude oil, by the way, has not given us much of any clarity so far. So we need to discuss it as well. Thank you, Jill, for the confirmation. So, and Philip. So in that case, let's head over to. So we have two Philips in the comments. I just noticed Philip Calphone and Philip Pack. Thank you both of you guys for the confirmation and clever as well. So now let's head over to our analysis for WTI or West Texas Intermediate Crude Oil. So far, we have had much discussion, and our point of view had been that this may be a possible diagonal heading in the upward direction. This is our point of reference at 70.379. Point of reference basically is the starting point of an analysis. As such, we have a different point of reference, but for that I will have to go and discuss the daily chart or higher time frame chart. So I'm not really interested in doing that at this point in time. You can just check any of the past webinars, maybe last or last to last one, we must have discussed it, or maybe the last to last to last one. So anyways, I just looked at it again today, and I do seem to have a feeling that the diagonal count is still valid, right? And what is the diagonal count really? The diagonal count really is 1 second. So diagonal count really is that this is a wave 1 up, this is the 2 down, and this is the 3 up, will be followed by a 4 down, and this will form a 5 up, right? So this is our expectation, right? There is no confirmation about it from the market as of yet, but that is generally how we expect that this market may proceed. Okay, now based on that, it is quite evident that we may see an leg up for the wave 3, which means there might be a long trading opportunity for which we are already prepared. In the sense, I have a alert placed around 81.545. Right, if the market goes higher than this, then I'll be interested in taking short-term longs intradays most likely. And I'm using this particular data feed. Just check at your end what data feed you are using, because the price levels will vary based on that. Just keep that in mind. So long story short, we are still expecting that this market might go up for the wave 3, then the 4 down, and then 5th up before it falls. And for those of you not following the complete analysis regularly, our complete analysis suggests that there might be a new fall forming for WTI crude oil. We don't yet have confirmation, but I am saying it because if the fall is still incoming, then all this becomes a counter trend trade. That is, this upward movement can be very short lived and fast, and then the market can reverse. So all trades taken in the long direction should be taken with extreme cautiousness because of this counter trend expectation that I have, right? Hopefully that clears all the doubts you may have. And one last thing is that it will not be a new thing if the market straight out falls from the current price levels. That would be the case because that can be the case because, as I said, upward movement is all counter trend, and counter trend movements may look like they have this remaining or that remaining, but they generally tend, or many times, not generally, they many times tend to complete much before than what the regular traders might expect out of it. The reason is very obvious. The big players do not really want you to take the last point. They do not want you to enter the shorts here. That would mean losses for them. So that's the way things proceed generally in the markets. That's my take on WTI's crude oil. I think it was pretty lengthy discussion for what this thing is really doing or not doing per se. Next, we will head over to gold. You guys let me know in the comment section if you were able to catch my analysis, or if you have any doubts, do let me know. Right. This, by the way, is gold. I'm holding some longs here, partial longs basically, with the idea that if the market goes lower, then we can add more. Right. The analysis has been followed so far quite well. And before I proceed with this, let me just ask you guys or request you guys to quickly hit the like button on whichever respective platforms you are on. And also I would like to take this time to request you guys to share these webinars once they are complete, and share it with the trader groups that you join, that like if you have a Slack group, WhatsApp or something where a bunch of traders meet up, then please do share this webinar link after it's complete. And the reason I keep requesting all this is because live webinars are a bit hard to promote on YouTube. Its algorithm is more focused, I think, in my personal expectation, which I have seen, is more focused on videos, and we still are not getting constant 500 views. So the way to get or reach that level is to keep sharing my work until more people become aware of it and start joining in. Right. So that's my quick request from you guys. And before we move further with gold, I like to point out very clearly we have got 11 plus moves on gold. 11 is the big moves, and then there are multiple other here and there smaller moves which we have got. Most significant ones I can just tell you off the top of my head is that we were able to capture some part of this, and this leg we were able to capture complete from around 1776 to 1809, sorry. So this part, and then we were able to capture parts of this leg up, right? This part up, this leg down, two trades here, and then so on and so forth. We were able to capture parts of this leg higher, right? I'm just reminding you guys why these webinars are important to be followed live and regularly so that you do not miss out any opportunities in the future. So now that we have all of that discussed and out of the way, current analysis. Yeah, by the way, this makes it the 12th trade. Gold is again a +1. Why? Because in the last webinar which we did, I very clearly stated that this market can have one leg down remaining. And we did the whole analysis of A, B, C, etc., etc. It's all there on screen. Since then, it has fallen, and we had two targets. One was at the price level of 1913, and the next one was at the price level around 1890. These were the two targets. It has gone and touched the target one, and it can still go lower for the target two. Now, it can form a complex structure for it, or there are some other configurations. We are not much really concerned about the configurations. What we are really concerned about is how the markets will proceed, or what are the different possible expectations in which the market can proceed. Give me a moment here. Okay, so what I was saying was that we are going to discuss now the different ways we want to plot on this chart in which the market might proceed. So there is a comment from Steve here in the comment section on YouTube, in the live comment section on YouTube live chat, that I took the gold B2C trade. Thanks. You're welcome, Steve. And thank you for posting that for our other viewers to check out. Now the thing I was saying was that either it can just proceed straight up from here, like this is the wave 5 here, so why not just go up? That's definitely possible. But as we know, markets not always are going to do the things straight off or the way which we want them to do. Okay. So what is the other expectation? The other expectation is that this market might be, let me just remove all the clutter. This market might be, let's just say, doing something like this. Right. What I basically mean is that this market might be following a W down X and then Y, basically a complex formation, a double zigzag to be more specific. And the way double zigzags would work is that they would look something like this. For this is a rough representation. There are multiple variations of these things. But in this particular case, this one should be able to explain to you what we expect of this market. So now that W is complete, it is possible X might have completed here, and in which case the market might straight out go like this. And if it does that, then basically it should go lower than 1900 at once. Okay, going lower than 1900 at once, it should stop. It should stop around 1890. That is what we expect that gold can do, right? So how am I factoring into the positions I'm holding? I will have to readjust my stop loss a little bit and take it below 1890 in the case the market decides to do something like this, right? If it goes straight up, then most likely I don't have to do much of anything, right? So that basically sort of does conclude our analysis here. Either this or sideways somehow and this or straight up. So long story short is we do expect upside is still remaining on this counter, and we do so hope, not hope, we do so think very strongly that one more up leg is still remaining on the counter of gold, right? And as such, we have already discussed the targets for upside. I think they were around 1950 followed by 2000. Since 1950 target has already been achieved, 2001 is the next. To be very precise, you can just check the last to last webinar. I think 30th or 31st webinar, we have discussed the actual price target very clearly in detail. So you can just check that. So for now, that's our trade setup on gold. And if you guys have any doubts, you can just type in the comments section or just type in understood or clear. And that does conclude our analysis on gold. Next chart which we will be discussing would be the chart of S&P's 500 followed by Nifty 50 and then Bitcoin in the end. Thank you, Jill, for the confirmation, and other participants, please also do let me know. So heading over to S&P's 500, what we see over here on chart is that last time when we were discussing this instrument, we were of the view that this market might be following something like this, a diagonal formation. And very specifically, I stated that if the market goes lower than this diagonal, then this can lead to short selling. Now, as such, I personally did took partial shorts, and once I saw this strong leg, it was the strength of this move which made me think twice about it, and I exited in some losses, the S&P shorts. Right now, the view has not really changed completely. That is, it is still possible that this market might continue to the downside, right? However, this odd behavior is making it a less likely possibility. Now, the odd behavior I've already mentioned, the extremely strong up leg, which is sort of visible here to everybody, is the odd behavior that I just mentioned. So, how do we trade in a situation like this? So, first of all, no shorts for now, because this market has shown some deceptiveness very recently. Not recently, like for the last few sessions, it has been moving a little bit too complex for most people, and in these situations we do tend to try takes one direction or one analysis over another, and we have a higher chance of not being right. So long story short is we don't want to take any shorts. We will be serious about shorts if it crosses 4011, and as such 4000, that is 4000, would be a better level to take some seriousness for short side. Okay, so I personally have a stop loss a little bit above 4000 at 4012, not a little bit, quite a few points above 4000, right? So no shorts for now, and upside, yes, it can go up, and we have already discussed the upside views, but let me just quickly show you guys that what is the bullish scenario that we think that this market might be following. 1 second. No. We have not discussed the bullish scenario in extreme detail, although we have discussed it a few times. So now that we are on the 4-hour chart, this is another important thing you need to keep in mind, that on the higher time frame, we do think that this market might be following a A down followed by a triangle sideways, which will then be followed by a new leg down. Triangle sideways basically means that this market might be following a 5-wave structure, which will be called an A up, B down, C up, D down, and E up, right? So this count can become relegated only if the market goes higher than the wave C high. Actually, not even relegated, but extremely low likely. So as such, we also had a resistance pegged at this trend line, the AC trend line, this one, AC. If you join them, this yellow trend line appears, and suddenly we realize that our actual price also, let me just draw this and remove all the other drawings. Now we suddenly realize that our price is also taking resistance at exactly the same level. Okay. So what does this mean? This does basically mean that S&P's 500 may even see a reversal right from here. That was, by the way, the analysis for the last discussion as well. Now, if we are wrong and this market just decides to go higher and higher, then first we need the market to settle above this price level. Only then we can expect anything up. So long story short, I've just discussed the short setup and long setup a few seconds ago. So both directions we have discussed. If you guys have any doubts or query, then just to type it in the comment section. Philippe Pack is saying, thank you for the intermediate outlook. You're welcome, Philippe. And before we move over to the next chart of Nifty, which will be followed by Bitcoin, again, I'm requesting you guys to please share my link in 2-3 of the groups or with 2-3 of the main traders you have in your connections. And if you are on Twitter, do make sure to like, retweet, or whatever else Twitter is known for. My Twitter handle is at the rate of 50 underscore EYES, as you can see over here. And I do post the links for all these webinars live, and after they're finished, I do post the link for my website over here. So likes, retweets, and shares, everything is very important to get our reach to the audience we ideally should be having. Okay, so that was for the off-topic discussion after S&P. And let me see the comment section. Jill is saying clear. So is Philip Calphon. Steve is saying S&P is good. Beware FOMC 19 hours GMT. Yes, that is true, Steve. And just to again convey it to the audience watching it on YouTube or on other platforms, we have an important news event incoming. If you don't already know, just go to forexfactory.com and you can check the dates and times and everything else. Right? So that event may affect the prices a little bit fast for the understanding of most people. So situations like those, it is better to remain prepared beforehand, which is just the thing which we did right now. With that, let's not push things further and head over to the very, 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 and very, very, very interesting case of Nifty's 50. Okay, there it is, the chart. So we have multiple analysis. We had running multiple different counts. And in the last webinar, I recall that we were also considering an extremely bearish scenario. That extremely bearish scenario was that this is your point of reference starting around 18887, roughly speaking. And from this point of reference, we had the wave 1 down, 2 up, followed by 1 and then 2 and so on and so forth. So that would make this the 3 continuing, the 4 and 5 for the 3, then the 4 and then the 5. So this was our expected progression on Nifty. This was super bearish progression, by the way, guys. Not our primary choice, but this was something we had discussed to keep in mind. If there is an extreme bearish scenario, then we are already prepared. Now, other or more likely scenarios or likely counts were that this market was following a possible double or triple zigzag. This was the main theme we were following, and based on that, I also did mention that it will not be unlikely if the market at least goes a little bit lower than 13406. So this is actually what happened. The market did form from what it looks to be like a wave wire down from the point of reference around the price of 18205. So now that the market has done the drama and or whatever you would call it, from the minimum expectation, now you can theoretically and practically say that this could be the A, B, and the last leg down is the C. So practically speaking, C may have completed, but I personally feel like it is possible that C may have more downside remaining. That remains to be seen. So on this particular counter, what is the strategy now? The strategy would now become that we observe this price action from the last close, which is around not around, it is at 17605.40. If the market does show us some sideways movement, that is, it tries to go and give corrective of moves of three waves or something, then we will be again interested in taking sell shorts on this position or sell short on this instrument. Sorry. So that's my take on Nifty. More downside still possible, but there is no confirmation. So wait and watch. And upside is I wouldn't say there's any confirmation. So I personally would only be interested above 17962. But I won't place any alerts because I'll be observing this thing for intraday, or even if I'm doing it swing, I observe it very, very frequently. Hopefully that does answer if there's any doubt you guys have. And if you are again interested in the detailed analysis on a little bit higher time frame, just check the last webinar or maybe the last to last webinar. That should be ample enough. So that's my take on Nifty. Let's see. Hari is saying wait for what? I mean, I'm waiting for Nifty 50. Oh yeah, okay. So as we just discussed Nifty 50, let me know if you guys have any doubts. There was one more point I wanted to make. Yep. So this is something I also observed and told you guys in the last webinar, that the volatility of this instrument has increased extremely, and we spotted it over here itself when Nifty gave these huge volatile moves, huge extreme up move, then extreme down move, then extreme up move, right? This is, as we just discussed last time, of the Hindenburg report. So Hindenburg is a company whose purpose is or whose job is to figure out companies that are possibly doing frauds with investors' capital. They expose them publicly, and they also take short side positions in those same companies. So specifically, as we discussed last time, and you guys must already be aware by now, that they had some reports coming out for Adani Enterprises, which is a stock listed on the Nifty 50 index. That is a part of the Nifty 50 index, sorry, and is listed on both NSE and BSE, right? So they did whatever they wanted to do. They did FPO. They tried to get as many subscriptions as the FPO as possible. You can just follow the story. But my point is, this is speculation. Yes, you can fool some random dude here and there, but speculators are smart people. When they feel the fear, when they know that you are losing it, they will strike. And this is what happened. Adani Enterprises saw 4 short circuits back to back, right? Basically, what I'm saying is that the market saw circuit limits hitting on the downside back to back. And what a circuit limit is, generally in NSE, if a stock goes down by 20%, they stop the trading for around 15 minutes, right? After that, the trading is again restarted. I think in Adani Enterprises or one of their shares, they had revised the circuit limits to 10%, right? And it hit it back to back, back to back. I was indeed short on Adani Enterprises, by the way, in the session. But I did not hold the position for very long, and my reason was that I found better opportunities elsewhere. However, the market, I'll just show you what happened here, the little bit of the drama here, just for keeping in mind how speculation works. So I was short somewhere here. 1 second. So they both hit circuits, Adani Port and Enterprises. They both are seemingly looking the same on charts. Interesting. So I was not trading Adani Ports, by the way. I just said somewhere here because it looks more or less the same. Now you'll get my point here when you see this chart. So this is the chart of Adani Ports. So roughly somewhere here I was short. I think I held till here somewhere. It definitely did not hit the circuit when I was having it in my trade or when I was in the trade. And then I exited with some profits and I shifted to Nifty shorts and whatnot, right? So after that, it hit this circuit, then this is a circuit, and this is a circuit. So you can just see that the trading has stopped here, then the trading again stops. And we just wanted to check the circuit limit. So they are hitting circuits around 5%. So National Stock Exchange has revised it again, 5-6% they are stopping. So this is how a thing falls. And even if you don't care about these scripts, you can't trade them. Well, here's a lesson for you guys. You should remember this, if not anything else. This thing has fallen 33%. This is not a joke. This is a Nifty 50 share, right? Let me show you on the daily chart. This thing has fallen today itself 28.72%, and the low was around 35%. Now, just keep this thing in mind. It doesn't matter what instruments you trade, which country you trade in, right? It doesn't really matter. It just goes on to show that once the bear parties know that the direction is clear, they will do everything in their power to capitalize on it. Reminds me of the days when we used to sell Yes Bank day in and day out. It will fall 10%, 20%, just like anything. So far this market has lost within the last 1, 2, 3, 4 sessions 36% loss in the last 4 sessions, and the low is around 41%. So that just serves as a good, what do you call it? Good exercise, reminder, or whatever it is you would call it. So anyways, I just thought it will be a good idea to keep this in mind and show it off to you guys. By the way, this trade was posted in the Slack group already, much before than this. Somewhere here I had posted it in the Slack group that it is a selling opportunity. So that's our take on Nifty, and I just wanted to have a quick look at Adani, and we did have a look at Adani as well. So that will lead us to our last thing or instrument, which is Bitcoin, which again is performing rather well. So Bitcoin, let's see what we discussed last time. So in Bitcoin, we were of the impression that this market was heading higher, right? Our confirmation would be establishment of price above 23,200 level. But when the market did go and give these spikes, we changed our analysis and said that 23,200, even though has not completely established, the upside possibility is at this point in time much, much, much stronger than the downside possibility. Yeah, by the way, guys, do let me know how did you find the side discussion on Adani here. I was just trying to get some additional things in. We generally don't discuss stocks here. I just discuss it so that it brings some educational value to you guys and a reminder of how fast things can move in these markets. Your feedback about that additional discussion would help me decide what new things to discuss. We can include some of these things and get more detailed analysis sort of form a case study out of them. So let me know in the comment section. I'll just check that later. Getting back to our discussion on BTC, as I said, we have now formed the view that the upside possibility is the stronger possibility among the upside and downside possibilities. So since the upside possibility is the stronger possibility, we will now discuss the counts, which actually are getting followed quite well. So our understanding suggests that we are an impulse in the other direction. Impulse basically means 5 waves, something like this. First leg up is 1, next leg down is 2, up leg next is 3, down leg is next, which is called 4, and the up leg which comes next is called 5. So if the market really is following this impulse, then we have the wave 1 complete here, the 2 here, and the 3 here. Now for the wave 4, we had 2 scenarios already listed out here. One scenario was that this market can straight out go up for the wave 5. Second scenario which was listed was that this market can either go down to the level of 22029 or 2230, or it can go down to 2928. So both of these levels the market can come, take a stop, and reverse, right? So the market has not touched any of them. That does not really or necessarily mean that it will never touch them. It can, again, as you can see with this red arrow, first go down, touch these levels or one of these levels, and then go up or straight out go up. Long story short, Bitcoin, we still feel that swing perspective wise, the longs are still active on this counter. Unless we see a strong leg lower than 2665, we will not be considering the bearish possibilities with the much of what you call seriousness, right? And for those of you who are looking to enter new, we cannot enter full-sized positions as of yet because a little bit more confirmation might be required. However, partial longs, that is if you are going to enter with 10, I'm just saying 10 lots, but you get the idea. You can use your money management accordingly. So if you are going to enter with the 10 quantity, you can enter +2 or +3 here. And if the market continues down, you can add +3, 4 here or 5, 6 here, right? Wait for the reversal and then enter the remaining quantities above the last high. That is add partial here, first entry, then partial here, second entry, and then partial here, third entry. So that is basically the plan on this counter. I think I've detailed discussion of this counter in the last webinar or last to last one. Just check yourselves. And for those of you who are joining in live, I'll just quickly mention that all these webinars can be checked out on my YouTube channel, which is 50 Eyes Market Analysis. You can just head over to my YouTube, click on live section, and in this live section, you can find all these webinars 33, 32nd, etc. etc. Click on any one of these, and you will these webinars have timestamps in them. You can just check the comment section. It will have timestamps of all the instrument discussed. You can just click on the time itself and it will work. Just to make your guys life convenient, I do go through the hassle of noting down the time, putting it here and everything. I do hope you guys are appreciative of it. And if you are, I would again request you to share this webinar once or as soon as it is complete. That's my only request to you guys at this point in time. We definitely need much more participation in these webinars than what we currently have. So with that, I would say that we have come to the end of this webinar. Jill was saying very interesting in regards to our Adani Enterprises small discussions. Same, say Steve is also saying interesting, and Philip back is saying appreciate the insights. So with that, let's just end this particular webinar. And as I said, we meet on Monday, Wednesday, and Fridays at 2 p.m. GMT. So I would look forward to seeing more people out there, and you guys who have always been there joining these webinars. Thank you for being there. That's about it, guys. Talk to you in the next one.